market got absolutely belted. That's not right. Some certain stocks in the
Mm.
market got belted.
Yeah.
Yeah, yeah.
So it's actually I was telling someone earlier today. There's a friend of mine. I don't talk shares with him because he gets a bit big-headed about it, but he's done very, very, very well. I mean, he bought Commonwealth Bank when they were down around $5 area, and but when it got up to around the 95 area, I thought it would have been a good idea for him to have quit some of them and then bought back in on a pullback, and well, no, he won't have that. So he would have wiped a lot off his share portfolio today compared to what was, say, 3 or 4 months ago.
Yeah, certainly. Terry, there's a lot of traders out there, and unfortunately, they've been educated by what I call the old school brokerage, which is
Mm.
and a lot of fund managers who what they do is they trade to their abilities. So because their trading platform can't run stop losses, they don't recommend you use them. Because their trading platform can trade, say, CFDs, and you trade a lot more with CFDs, they push you into CFDs. So,
Mm.
there's a few people who I speak to, and I know as soon as the market has that big fall, there's going to be some blood in the streets. Santos got absolutely murdered today, down to 425. BHP over the last the week, even from
Mm.
Friday, it's got killed. And there's a thing in the markets which people have got to realise, and we're trying to educate them through Ideal Financial Group. We're trying to educate them into opportunity cost. Okay, gone are the days of you buy some shares, and it costs you $400, $500.
Mm.
So you don't get out. You get you used to get the piece of paper when I started in the markets, and you had 1,000 shares. If you wanted to sell 500, you had to hand in the piece of paper, and it was kind of a little bit tricky to then sell the other 500 or sell 200 because you then had to wait till you got the bit of paper back, or the broking office had let you do it, but they weren't quite sure whether you actually owned the shares, and it was a debacle. Nowadays with online electronic platforms, in our platform, you can put on your mobile phone, you can watch all day.
Mm.
We can run trailing stops. So if it keeps going up, happy days, like just let it go up, but as soon as it does that pullback, we've got, there's a lot of people now doing self-managed super, and I'm trying to help them and try to educate them. I've been in the markets many years, and one of the things with self-managed super is, they've got their insurance policy on their car. If they crash their car, they don't lose 50 grand or whatever their car's worth.
Mm.
But they don't sit there at the end of the year and go, oh, I've just lost $1,000 on my insurance policy because I didn't crash my car. My house didn't
No.
burn down, so I'm bummed out because I didn't claim on my insurance policy this year. And that's where Ideal Financial Group can really help the people with self-managed super, or the people with share portfolios who want to buy and hold. It's not a drama buying and holding, but what we want to do is we want to hedge those positions. We want to protect you from the downside. So when those shares go on the downside, right, we can do some positions around it to allow you to hedge it. We can do some options positions. David talks about that. We can do, sell some SPY, share price index, for instance. SPY's about 5,000 something at the moment, 5,100. So it's worth about 120, 130 grand's worth of, your portfolio. We did a SPY trade for a client the other day, which was which he was keen on doing, and what he did was sold roundabout, I'll just use round numbers for the sake of the presentation tonight, but he roundabout sold at 5,300, right? Bought them back
Yeah.
the other day for 5,100, right? Made 200 points, made $5,000. Now on a 100
Lovely.
grand portfolio, he's just made 5%, which has covered his portfolio move, which has moved on the downside. So,
Mm.
he's ahead. So it's been a good trade for him, and he's been able to protect himself from these volatile markets, and he's been able to do what he wants to do, which is buy and hold, which is fine.
Mm.
Buy and hold,
Mm.
tactics, as you said, your friend long term can work.
Mm.
I'll just do a quick warning and disclaimer
Yeah.
for
Pleasure.
everyone tonight. I'm John Robertson from Ideal Financial Group. Uh, we're a corporate authorised representative of Aruda Proprietary Limited, which have an AFSL, Australian Financial Services Licence. And the information tonight is for general information, not prepared for your specific investment objectives, financial situation or needs. Consult a licensed investment advisor before making any investment decisions. Before making investment or trading decisions based on methodology, the investor or trader should decide with or without professional advice whether trading meets your investment objectives and suits your needs. Okay, it's your decision to trade, right? Tonight's things about presentation, it's for educational purposes, okay? If you need a hand, feel free to give me a call or email me or speak to me, chat during the webinar. We can assist you with these things, okay? So, yeah, we're licensed to give financial service advice, so we can help you with that. Ideal Financial Group has an online trading platform which enables you to trade shares and derivatives. And the beauty with that is we can not only trade shares in Australia, we can trade shares in the US. We put out a share thing the other day. One of our guys from Perth, Claudio, who's a great options trader. Anyone needs some assistance with that, he's over in Perth. For anyone over in the Western Australia, he put out a whole bunch of research on Alibaba leading into the Chinese Singles Day, which was the other day. Looking at a lot of the Chinese singles going out and purchasing, and especially purchasing online, and that's what happened in the market, and that's what and that's what then eventuated.
John,
so okay, just enough for me. I'm JR from Ideal Financial Group. We have an online charting package, free advanced charting, and the online trading platforms is free to anyone. We can use it. You can do your charts and trades. The thing about it is it's fast and it's robust, which makes it an excellent trading tool for anyone, especially in these volatile times. Okay, so all you CFD traders, make sure you're not leveraged too much. Okay, if you've got a $3,000 margin or a $5,000 margin, look at your leverage. You might be trading 20 to 1. You might be trading $100,000 portfolio. Now, if you're trading $100,000 portfolio, the market comes up 5%. Right, that's a $5,000 loss. Now, you might be running a $5,000 margin. Right, you've just done 100% of your margin. Okay, You might only really want to have a $5,000 position in that one share. Okay, so we at Ideal Financial Group
John,
can help you with all that stuff. Anyway, enough of me. I'm John Robertson from Ideal Financial Group. You can contact me at jr@i-deal.com.au. 1300 293 325. Terry, I'm really looking forward to hearing what David's got to say, because the market's it's kind of a market of two halves. You've got the Santos's and the BHPs getting whacked. You've got the banks bringing out positive profits, and yet the share price has kind of come off over the last couple of months. You've got firms like Blackmores and a lot of those companies which have got exposure to China really doing well. So that's what it's all about. So yeah, really looking forward to hearing what David's got to say tonight, and I think we're in for a special treat tonight.
Now, John, don't go. You're still with us? He's got his thing turned off. I want to tell you something about John.
David?
Yes, I'm here. Yeah, I want to tell you, tell the people about you. This is not selling. What I'm about to tell you is not selling. No. I want to share with everyone this. I recently recently started trading using you, and you really, really care. And it's fabulous. And
ready for the Your Money, Your Charts with David Hunt tonight.
Can you hear me? Am I on mute? Well, I'm going to talk as if we're still here. I've recently started trading with John, and he really cares. He's really fabulous.
Everyone hear David?
Yes, John, we can hear you.
I can just say that this is not a selling thing. John Robinson is very, very good, and I would strongly advise you to use him, because he really cares. Hello, David. How are you? I can hear you loud and clear.
I am good, Terry, and you?
Yes, I'm very good, actually. It's very peaceful here in Tasmania. But one of the best things I've ever done in my life is come and live down here. In fact, I was talking to you today, and when I left here, I went down to and had something to eat at McDonald's on the way home, and I got the Sun newspaper there in the McDonald's and had a read of it. And you know what? That bloody Victoria Police down there, over there in Victoria, they've now got a police car parked, or a speed camera parked half on the footpath. I mean, that's just not on. And they're now parking the speed cameras at the bottom of hills, so people go down the hill a bit quicker, they can get them for a bigger speed. I mean, really, is that a way to live?
Not really, Terry, I think. It's not really a way to live, but that's the way police have been doing it in New South Wales for years. So,
well,
unfortunately,
come down here with me. We'll look after you.
Unfortunately, our police in New South Wales did that in the 70s. As soon as they got the ability to do, to actually check your radar, they were down the bottom of the hills. My dad was chased by one policeman for a very long time. Dad was doing a little bit over the speed limit. The guy just kept following. Dad was trying to get away from him, so because he didn't know who he was. Anyway, that's my dad's story. I don't know whether that's true or not. That's probably apocryphal.
Now, before we get into what we're doing tonight, I've come across a very interesting little article, and I'd like to share it with you. Now, at the finish, I'll give you the address of where you can get a copy of it if you like it. It's called Helga's Bar. Some of you may have heard of it, some of you haven't. It's called A Dummy's Guide to What Went Wrong with the Economy. And here it goes. Helga is the proprietor of a bar. Now, she realises that virtually all of her customers are unemployed alcoholics, and as such can no longer afford to patronise her bar. Quite a problem. To solve the problem, she comes up with a new marketing plan that allows her customers to drink now but pay later. Now, Helga keeps track of the drinks consumed on a ledger, thereby granting the customers some loans. Now, word gets around about Helga's drink now, pay later marketing strategy, and as a result, increasing numbers of customers flood into Helga's bar. Now, soon she has the largest sales volume for any bar in town. Now, by providing her customers with freedom from immediate payment demands, Helga gets no resistance when at regular intervals she substantially increases her prices for wine and beer, which are the most consumed beverages. Now, consequently, Helga's gross sales volume on paper profits increased massively. Now, a young and dynamic vice president of the local bank recognises that these customer debts constitute a valuable future asset and increases Helga's borrowing limit. She sees no reason for any undue concern since she has the debts of the unemployed alcoholics as collateral. He is rewarded with six-figure bonus from the bank. Now, at the bank's corporate headquarters, expert traders figure the way to make huge commissions and transform these customer loans into drink bonds. These securities are then bundled and traded on international security markets. Now, naive investors don't really understand the securities are being sold to them as AAA secured bonds and are really debts of unemployed alcoholics. Nevertheless, the bond prices continue to climb and the securities soon become the hottest selling items for some of the nation's leading brokering houses. The traders all receive six-figure bonuses. Now, one day, even though the bond prices are still climbing, a risk manager at the original local bank decides the time has come to demand payment on the debts incurred by the drinkers at Helga's bar. So he informs Helga. Helga then demands payment from her alcoholic patrons, but being unemployed alcoholics, they cannot pay back for their drinking debts, and since Helga cannot fulfill her loan obligations, she's forced into bankruptcy. The bar closes and Helga's 11 employees lose their jobs. Overnight, drink bond prices drop by 90%. Now, the collapsed bond asset values destroys the bank's liquidity and prevents it from issuing new loans, thus freezing the credit economic activity in the community. Suppliers of Helga's bar had granted her generous payment extensions and had invested their firm's pension funds in the bond securities. Now, they now find they're faced with having to write off her bad debts with losing over 90% of the presumed value of the bonds. Her wine supplier also claims bankruptcy, closing the doors on a family business that had endured for 3 generations. Her beer supply is taken over by a competitor who immediately closes the local plant and lays off 150 workers. Fortunately, though, the bank and brokerage houses and their respective executives are saved and bailed out by the multi-billion-dollar no-strings-attached cash infusion from the government. They all receive 6-figure bonuses. Now, the funds required for these bailouts are obtained by new taxes levied on the employed middle-class non-drinkers who've never been in Helga's Bar. So now do you understand, David?
Now do I understand? Of course. It's the way the world
now,
works.
If anyone would... Yes, I know. If anyone would like that, you just go to Google and type in Helga's Bar, HELGA''S, bar, and you can download a copy of that little story. Not a bad little story. However, I read that for a reason. I'm reading that in the United States, as you may remember, they had the subprime housing fiasco, which is probably a bit like the Helga's Bar story. They've been selling heaps and heaps of automobiles over there, and you basically don't have to have any much of a credit history. They'll just give you the loan, and they're talking about, and they're extended loans like 6 and 7 years on these cars, because they'll be stuck by the time they get anywhere near that. And like the alcoholics, they haven't got much money, and I think there could be a little problem looming. You're looking good on that television this evening.
I thought I might as well give you my head. Hi, everyone. I'm a bit sunburnt from surfing today.
Oh, you poor thing.
There you go.
So there you have it. So what's your take on that, David?
That's the way the cookie rolls. These, that's the way the CDOs work. I suspect that's the way things like, these binary options work. Massive Ponzi schemes where people put their money in. They pretend that they're getting money. They pretend that they're making money. More people put more money in. Fictitious numbers go up inside those. Fictitious numbers go up inside the trading accounts, and then eventually somebody says, "Can I have the money back, please?" And with a lot of these things, like I think these binary options, they tell you, "Oh, I had a phone call from somebody today. Just put $350 in US, and the system will trade for you. And we're going to teach you about money management." I go, "Hang on, but if the system's going to trade for me, why would I need to know about money management? How much did you earn last month?" Oh, she said, $3,000. I said, "Oh, that's quite good, isn't it? Tell me how much you lost when you did lose." "Oh, we make money 85% of the time. Therefore, we lost money. We lost 15%. I go, "So you mean all of it sounds like bullshit to me, because you get calls out of the UK from people with Spanish accents saying their English names, all sorts of strange things going on." And that's the classic Ponzi scheme. We had a friend who was making millions. He told us absolute millions, and he was doing it with some other syndicate like that. He just put the money in and it comes out. He got all of his friends involved, and hey presto, he ended up taking some money out, and his friends lost all of their money. So that's all of these things are just a giant shell game. We actually have one going on, which we're going to talk about in a little while, in 2 Australian stocks. We'll talk about that soon.
Well, you've made some predictions long ago about BHP. It's certainly coming down to the target you've been talking about a long time ago.
That is true. We are in the we're now in the zone. BHP is in the zone that I've talked about many years ago, like about 4 years ago. And the question is, will it stick in there? I talked about up here. I was talking about $20. Got it down to $20.21 today. Question is, does it go to $19.80? We might talk about that a bit later. What do you reckon, Terry? We'll talk about that one a bit later on BHP.
Why don't we do it now?
No. Let's talk about it later. Let's move on to the questions, because we just need to.
Brilliant. Well, First question is Collection House. That's CLH. So when you've done that, I've got a second one waiting for you. Medium to long term, hold for super fund investing.
Okay, CLH. Can everyone see the charts okay? Looks like you can see them just to make sure. Okay, CLH. Now CLH itself has been doing okay. It got a heavy thump on volume, but it's resurrected itself. I wouldn't like to see it close below about $1.94. So if you actually long, I think you'll find it will rally back up to $2.17, maybe up to $2.30. At this point, you want to be holding on. With that stop at $1.94. Should it break down at $1.94, we'll have another go at $1.66 on the top side. Do not expect new highs up towards $2.56 for the next month or so at least. Just more of a corrective rally on this one. So in terms of what we've seen here, $2.23 would probably be about it, and $1.94 also the stop loss. Should it decline below $1.94 in the intermediate term, I'll be looking for $1.77 on the downside.
Okay. QUBE, that's QUB, medium long term hold for super fund investing.
Okay. On this one, it's just, I believe it announced a bid for Asciano, if I'm not mistaken. Now, when that happens, it is the stock that you don't want to be in. You don't want to be in the acquirer. You want to be in the, sorry, you want to be in the purchased, the chased, the stock that's being acquired. At the moment, there's a brick on its head somewhere between $2.47 and $2.63 for QUB. It's gone out. It's trying to swallow a bigger one. That I'm not sure whether management has been heavily involved with acquiring much bigger companies. I'd suspect not. At the moment, you want to have a stop loss below $2.14. One of the principles when I was in funds management, the old guy who was teaching me how to do the shares, he said, "You don't buy the acquirer, David." And he said you sell that one and you buy the one going for that's being bid for, because the stock will keep up and you'll probably end up with a better return. So at the moment,
good advice.
Charles is saying pretty sure it's Chris Corrigan. He wants the ports back, and if it is Chris Corrigan, I have a bit more confidence. But it's still the same principle still applies, and Chris actually goes to the same dentist as I do, which is interesting enough. And Tony doesn't give me any tips about what Chris Corrigan's doing, but I would say of anyone, Corrigan's a little bit more capable than most. So I've liked QBE for a while, QUB, but I would say at the moment you'll probably find that it'll be a bit heavy because it's got to merge the two operations, deal with them, and so I wouldn't expect it to shoot the lights out probably for a few months. A drop down to $1.64 on the downside. Thanks, Robert. Have a good grandson's birthday.
Yeah, that Chris Corrigan, he's a smart fellow.
Yeah. Thanks for that.
And a good operator.
Thanks for that, Charles. Charles is one of the PHG Brains Trust members.
All right. What am I?
You're the performer.
Troublemaker. Also, I've been watching an online educational stock called 3PL Learning. They do math, science, and basic English skills, and are interested with long-term investment in it. Can you review the long and short-term view of this stock? The code is 3PL. Thank you, says Jaden.
Okay. So 3PL is a bit messy, and the education part has been really a bit overloved. And what we've seen is a heavy decline on reasonably good volume. And I'll just get rid of this camera thingy. So
Looks good, to be truthful with you.
there, all right. It's just that I've got to look at different screens for my charts. So maybe I can do this over here. Actually, I'll do this over here. There we go. And
the surfing's been good for you today.
Oh, makes my cheeks blush. Okay, so it's done a good rally, good enough rally here, and what we see is that you got serious overhead resistance to 250, and the people $2.50, and the people who were stuck up here have started to sell into it. So you probably enter a bit of a choppy range, probably down to about $2.09, $2.10, with a bit of a bounce up to $2.37 is the possibility. And you can't see that because I've just taken the chart away. Isn't that smart? Okay. Alan's quick off the draw. Thanks, Alan. And you can see it there. So I suspect a range sort of down here up to 240, maybe 250. It's going to find trouble moving around a fair bit. Okay.
Okay. Now, is Linus LYC showing some signs of life? Now, I remember that was about $2 there a couple of years ago, wasn't it? What's that worth now?
Linus? Linus is not worth much. It's not worth much, but it has been getting better. It was just one we've been tracking. One of our PHG members loves the small crappy stocks, and so I've been telling her that Linus is okay. It's a bit of a change from my story, which has been one of the other Brains Trust members, can we buy Linus? I say, no, it's a bag of shit. Goes down again. Can we buy Linus? I say, no, it's a bag of shit. Goes down again. I say, can we buy Linus? No, it's a bag of shit. 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 We ignored it totally in this long basing formation. We've seen a good base and a good breakout. So what I'm saying is we're looking up towards about 16 cents on Linus. Volume has been good. And so I don't mind it at all. Your stop needs to be around about the 4 cents though. So is that better, Mark? You got your chart? And what I would say to you is Linus is okay. Don't expect 64 cents. That would be a dream with a big hallucination, but good things may come, especially above 20 cents. So above 20 cents, I'll start thinking about that higher level. In terms of the weekly charts, what we can see is it's reached a bit of a breather. So a pullback down to 6 cents or 6.1 cents would be good. We can see it's trending well on the day, on the weekly. So I quite like Linus, even though it's had a bit of a pullback. When we drop down onto the dailies, we can see that that first area for support would somewhere be around between 6.5 cents and 6.7 cents. Stoppy would be below 6 cents if you're trying to get on that one.
Was it a trade you'd do?
Oh, it was definitely one when we were noticing that was breaking out down here, and as you saw from the PHG questions, you know, the questions, I was saying that. Should I pull that up, Terry? Would that be helpful? I might pull that up because a lot of people don't. A lot of people see that.
So what was that worth a couple of years ago, Linus?
Well, Linus was worth, as you said, it was up high. It was $2.50 at one stage.
Yeah.
Adonis is saying $4.50, which is probably, yeah, 270 was the high, but was there any adjustment? There was an adjustment of 4 for 3 here, and then there was possibly some other rubbish go on down there, but I don't think it was really that one. Where is this? I'll just quickly find this on the PHG trades posts. These are all what you see here is we like to say 3-digit code, whether you're long, medium term, which is generally weekly charts, VTX, long. These are all questions that people have asked me today in the last couple of days, and these are the transcripts. So we'll just go back and see what I was saying. Sometimes you can catch me out and say, David, you were inconsistent in this. There's Linus here. So we're going to view this. That was back on the 10th. Okay, Linus, sometime. This is getting kind of interesting long term on a close above 9 cents, target 16 cents above 18 cents, then love is in the air for 64 cents. Buy dips to 6 to 7 cents with a 5 cent stop. Short term, it's got too much love, and this was on the 10th at 11.47. So here we go. Where was the 10th? Okay, the 10th was here. That was this day at 11.47, and I said probably needs a pullback on this day. So I guess that would have been helpful for people who wanted to buy the breakout straight away. So at the moment, we're just still waiting for that pullback, and we're getting it.
Right. Okay. So what target would be the you pick up 6 cents area?
Yeah, 5 to 6 cents. 5 on a deep dip, but 6.5 to 6.7 cents is the right area first up.
And that's a trade that you'd say sounds pretty good.
I prefer it at the 5 cent zone personally, because it's more in keeping with the longer term, because I like to sit in positions for longer. But yeah, if you want to have a go, that's that's certainly in keeping with the move, and a stop loss on that case, on that basis, would be here at 6.3 cents.
Well, Mr. Tom, that was a very good question. A very good question. You did that well. Now, IPH has had a strong run. Is it due for a pullback or still medium-term long? And thanks for the beers, says Rowan.
Thanks for the beers. Where's that come from? Okay, thanks for the beers. Okay, IPH Limited. Oh, right, okay. Oh, thanks and beers, he said. That's thanks and cheers for beers. I think.
I see. Right, cheers.
Okay.
Right, okay.
So IPH, strong, nice basing. It's sort of struggling a little bit. I'd say this is probably doing a third wave, and we're struggling probably in the fifth wave on the lower levels. What I will be doing next week is I'll be doing some teaching and some education on next Thursday night, an Elliott Wave webinar called Train the Chartist, because what I've found is if I've trained somebody, they often, particularly the traders green room people, go on to be very independent and very successful in their own right, and they can say, look, I'm not taking the dumb trades that I used to, and when I do, I get out really quickly because I know when they're wrong, and they become independent. Now, not everybody wants to be traders green room people. Most people want to get my advice, but the ones that go further and want to really test their things to traders green room. But this is the start. The traders green room is the end of the process, and it will take 6 months for you to get that traders green room. Train the Chartist gets you started for that process. Now, IPH, I have no idea what it does. We can see volume has been good on the monthly charts, and if you wanted to watch a pullback down to $6.44, it's a good spot. Now, we can see that it's struggling a bit, and we can see that we've got a fourth wave come out. We're in the fifth wave. That's quite clear from the monthly chart. It is struggling. Now, there are two choices. 55% of the time it will break out and run. We see on the weeklies, we see a doji of confusion. What this means is if it breaks down below $7.25, we'd look for $6.70 and possibly $6.37. That would be the area where I'd like to be picking it up with a slippery stop just below $6.25. Can I just ask you a question? When I'm speaking like that, is that too fast for you? Too slow, just right? Should I slow down? How is that for everybody here? Just give me an idea.
Well, while they're doing that, I'd like to put my opinion in. I think you're working the best I've ever seen you work at the moment.
Okay.
And I mean that. You know you get the truth.
There's a couple of people who are saying it's a bit fast. Okay, so I'll bring it back a little bit. Goldilocks says just right. Oh, Jay, how are you? Please slow down a little bit, says Zoe. Okay, so there's a couple of people, because this is more for, I go really fast when I'm in my speed webinars on some things, and some things which I'm trying to get an idea from, I will go slow. When it's clear, I go fast, and that's why we record them. So so some people can actually play them back, and you can go back through each of the recordings and say, okay, I wanted to see what David said with this, and you can pull it right back on the recording and say, I wanted at that point. Say, what did he say about that? Anyway, Terry. So
Right.
IPH is a little bit, you can see that it's diverging a bit on the weeklies. When you drop down to the dailies, there's probably one more press, and that press would be up to about $8.01. Once it's above $7.74, it is at risk. And when it's at risk, a break back below $7.31 would be a break back down below would be where your stop would be. So at the moment, we're getting a divergent pop. Eventually, this will probably come back and settle somewhere between 636 and 670 pretty easily once this next push is complete. And I'll go into that on next Thursday. We haven't got time to do that for the reasons and the rules for that.
Right. I'd like your opinion on CAJ as a buy at these current levels, says Peter.
Okay. Now, Tony, when I'm looking at M, I'm looking at longer term. So when you see the M up here, you're a PHG member that's just joined. When you're looking at M, we're looking long term. That's the monthly chart. When you see up here W for weekly, which I've just pressed there, that's medium term. And when you look here, and I press on the dailies, then that's short term in my nomenclature. So now CAJ Capital was one where I was targeting down to around that 35 cents. It has stopped there, but it hasn't stopped there. It's not stopping properly, is a better word. So it's not stoppily properly. So it's forming up a little bit of a congestion, and it probably is going to go down again. It really needs to recover above 50 cents to be slightly hunky-dory. And we can see here it's getting sloppier by the minute. It's still trending to the downside on the weekly, so be cautious with that one. And yeah, at the moment,
Is it one you'd stay away? Is it one you'd stay away from?
to state the obvious, yes. 40 cents is the top side, and is where it probably headbutts, and there's probably a little bit more playing around it can do. But at the moment, this volume to the downside, this contraction in volume and range indicates we're probably looking down to around about 21 cents. A lot of people have been asking me about this, and I don't watch Your Money or Call at all. And so I don't know what people are saying about it, and I don't know what a lot of the reports are saying, but down here, there's something not right about this stock at the moment, so I would be staying away and have a revisit around the 21 cent area.
Right. Now, here comes the big one. What price do you predict for STO, Mr. Santos?
Okay, now I wanted to talk specifically about Santos. There's been some questions about Santos, and I will talk about this one. Now, this is a really big caveat. This is just my idea, and some of the things may apply to your CFD provider. They may have different policies from what we're used to. Rights issues are an important thing is to note that rights or entitlement issues are like options. They're like ETOs. And what you can do is you can sell them and buy them on the market. So Terry, when you're going to clear your throat, if you can just mute yourself, that would be good. I'll try and do that too, but sometimes I don't. So they're of something of value. So when they told us that we can buy these shares at $3.85 if you're a Santos shareholder. Then that means the difference between where it's trading at, which I think it closed at $4.21, and $3.85, plus the time value of the option, is what you can sell your rights for. There's actually intrinsic value of about, in this case, the difference between $4.21 and I have to put this up on the board because I'm listening to Terry snorting and stuff at the moment. So $3.85 less and the difference between that one. So let's make that 6 cents. Let's make that 26 cents. No, that's where are we? 36 cents or something like that. Let's call it 36 cents. So that is actually worth some money. And Cindy says that she sold her store, and you might have seen Cindy's a PHG member. She's a very active trader. She sold her STOR at 68 cents. Okay, so how you got that? When did you sell that, Cindy? Because that would have been, let's look at the chart. It may not be up on my system just yet. So you did it with ComSec. Oh, here we go. Rights for us. Rights for us. I'm sure it doesn't mean that, but it looks. I always find them very funny, these things. Okay, so today, that would have been today where it closed at. It's 54 cents, and you can see here there's a 60-minute chart. You probably there we go. So so these rights issued opened. Cindy, you did well. Pick the top, just off the top. The rights issued opened today up at the 65 cents region, and Cindy had to call ComSec Direct to do this, and they've come down. So at 65 cents was the open, 68 cents where she sold, but where the settled at was around the 54 cents. So where I said that if it closed at, where is it, the level at, it closed at 430 minus the 385, which is whatever number that is. So that's 5 cents, 45 cents. And so it has about 10 cents worth of time value as an option. Okay, so as this gets closer and closer to being complete, then this time value will decrease over time. And what will happen is that the premium that you'll get, whereas it was 54 cents, it was 54 cents on the option or the rights issue, that 10 cents will get down, and so it'll just move eventually like the way the share is. So so a little bit of stuff, you've got some value there for those people who are worried that they've lost money on Santos. Your actual value is $4.30 plus 54 cents. So what you've got in the kitty at the end of the day is actually $4.88. So you need to understand that as at the end of the day today, you're actually not as bad off as you thought you were. Did anyone thought you were really badly off today with your Santos? Okay, wave your hands, or is that helpful, understanding that? Anyway, so they do have a value. That's something to recognize, and you can sell it on the market, and the code is STOR on the ASX. Now the owner of the shares the owner of the shares can sell the rights. Just remember that. Now, I didn't know what the rights code was until Cindy came up with it. So it's STOR, and I'll write that down so you can put it on your pipe and smoke it if you want. And I'm actually not writing, I'm using the mouse to do it, so forgive me if it looks shitty. Okay, so now let's clean the screen. So, as far as I'm concerned, this is magic mushroom land. Pity I can't send you a picture of all my drinks. In terms of magic mushroom land, this has to have been the wackiest week I've ever seen, or week or two, that I've ever seen in a particular stock. Now, what have we done? We're going to look at the investor's perspective. We're looking at a trader's perspective. Yes, Tony, no, if you sell the options, you cannot buy the actual offer. What you do is you get left with your shares, or you could sell them too. Okay. Now, let's look from a trader's perspective. We'll look from a short trader's perspective and a long trader's perspective. And we'll also look from the magic mushroom perspective and a CFD trader's perspective. This is a weirdness around these issues. I love the look of those mushrooms. I wouldn't eat one, but now we had a big offer from a mystery scepter, Misto bidder. He was previously, or they were, supposedly out of China. When they said $6.88, I said Chinese related, no problem. It's been previously a failed Misto Bermuda bidder off in one other offer. And some of the sketch, it's pretty sketchy about who the people are. They said they were Saudis, they said they were Chinese. Nobody knows, right? It was rejected by the company despite being higher than where the market was. And Stuart, you're quite correct. Class action should come up. There's a non-renounceable entitlement, but it's tradable like a rights issue, as I mentioned before, with a Misto Chinese horny investor wanting to pay $6.80 for a $10% shares, despite the renounceable issue at $3.85. So where is ASIC in this behaviour? Now, I think the conclusion is a Misto bidder was blocked by another Misto bidder in bed with the company. And where is ASIC? And this has also happened in AJQ Armour Energy with Westside Misto bid, and then somebody else came out of the world with part offer and the share price has gone down. Now, for my money, and Stuart, sounds like you're in there, this is smacking of complete bullshit concocted and corrupted by the company. So what's happened is the company has been able to sucker people in to lift it up, and probably it's company related. As Alan said, probably nobody. Probably the company whacked in the Misto bid through SEPTA, through Bermuda, right? Then they get rejected and they go, okay, well, there's the market values up there. Then they get another Misto person to come in and pay $6.80, right? And then they shove it up the asses of the investors. It's, you know, it just doesn't make any sense to me that what's gone on. It's been ducks and drakes. So what we've seen here now, Santos has form in the past for this, right? In May 2009, they were issued non-renounceable offer, 2 new shares for 5 existing shares at $12.50. A pro rata non-renounceable entitlement offer. At the time, Santos was trading to $18. It quite quickly in the next 6 months lobbed down to $10, below the $12.50 entitlement price. Then it spun up to $18. And what we see here is 1 share for every 1.7 shares. If I've got it right or wrong, forgive me, shoot me. The detail is, I'm just typing it up. Now, it was trading below $5 for most of the month, and then they engendered a scam, right? Now, I don't approve of lawyers, but I also think ASIC should be doing its job. There's something really screwy about what's going on with this. So from the investor's perspective, it troubles me to see that last issuance saw the share price go below the 12.50 mark within the next 6 months. That's a negative event. It did have a bounce afterwards, about an 80% in price, but it's kind of negative. After it hit that $10, it bounced to 18 bucks. But then it fell through time, which is negative. Also, institutions fail to take up much of their allocation, and they know something, negative. Notice the banks, they didn't take up all of their allocations, the institutions, and the banks are now lower. Something to think about. The company took advantage of the share price rise to issue capital and inflated prices, and this is not good. They're scamming us, which is negative. Cycles are negative till mid-December. That's what I care about probably most. Investors get to spend some money to buy at $3.85, and the rights issue should be worth the difference between the current price and the issue price, adjusted for the number of shares. So it's not as badditive, if that's a word, I can invent it. Right, now let's talk about from the trader's perspective. If you are short, as I know some people are, and the question asker was short on Santos, if you go on to the next question, Terry, on CFDs, you must supply a corporate action to the person who is long, and you lose money on that because you have to come up with the shares. But you gain on the short. Now, if you're in the ETOs, you get an adjustment, and you might want to look at this particular, in particular, this link, which talks about how exchange traded options are adjusted. Now, from a trader's perspective, on the short traders, you probably got that adjustment, but you should check with your provider. IG say so, First Prudential says so, and this is the link from the First Prudential person, what happens with the rights issue. Has anybody been reading these things? Give me a wave, say hello, give me that sort of thing if you have been. If you have been reading what happens with these ones. Okay, so in terms of a long trader's perspective, you get supplied with extra stock, and you need to fund that extra stock on the basis of the corporate option action when it's in the money, or you've just got to sell it down. And again, in terms of the ETOs, they adjust on this one. Now, it's unclear to me what happens in many of the CFDs when the sale of rights, whether the rights are saleable. So at the moment, I assume not, but you should check with your provider. Okay, so if you, on the trader's perspective, if you are short, leverage is fun. If you're thinking it'll hit $3.85, but remember, you'll get shorter due to the rights. If you're long, then the leverage is bad, and basically you've got to ask yourself whether the company inspired losses, if not sell rallies. Now, Tony, this is the reason I want to do this, because this is important. A lot of people have been worried about what happens with Santos. I want to make sure that they're okay with this. We'll get onto some charts soon, and I'm sorry. You'll get longer due to the rights issue on this one. So from a CFD's perspective, trader's perspective, you're already leveraged and you're going to end up with more stock. Now my theory is you probably get down, and this is something from the IG markets twist if you want to read that later. So we'll get onto some charts now. And Tony, I'm sorry about that. I do mean that, but I wanted to cover something about Santos because people get hysterical. When they get hysterical, they stop breathing, and when they stop breathing, they make bad decisions. So if you can look at it with a bit of a distance, have a breath, and we can all maybe get some sleep. So and relax, because it's not as bad as it would seem at first, unless you're in at $6.50 near the top of the day the other day. So, Terry.
Well, I'd like to say something. You've just done a wonderful job on that. I don't care how long it takes, you did it properly. And if people are complaining, well, go somewhere else, because what you did was really good. Okay, well, we're nearly out of time after that. We're going to go back and have a look at BHP from earlier on.
Okay, well, BHP, let's go and see if it drives down. And I'm going to do it in a slightly different way. I'm going to do it on a couple of different levels. What we're seeing now is a decline in volume as the price is going down. And we're seeing a final capitulation. And you'll notice over here the $20 target is we're basically hovering around that $20 area. I did have a $19.80 area target, which I have mentioned on television. You may not have heard it, but I do mention the $20, and then I say possibly $19.81. So we're seeing that decline. Volume was high, and it's sort of sliding around. When it was in this area, I was saying, no, it's a bit suspicious. And we had our first PHG trade in BHP a couple of days ago for quite a while to buy some, and we got stopped out on that. And then we had another go, and we got stopped out on that. But we only lost a little bit. So we're still trying to hunt a bottom down and look for it. Now, where that is the $64 million question. Now, I thought it might come from the mining disaster. And when I looked at the mining disaster results, i.e. how bad it was, I realized there are no problem, Cindy. You can watch the recording. See ya. So when I looked at how bad the results, that's catastrophe. What am I to say to that, Cindy? You're giving me... Okay.
You going to share it with us?
I think Cindy's going to have a good night tonight. Anyway, let's go down. Let's go down to where was the GFC low? This was basically in November. We're in the time zone now, which makes sense. And thank you for that, Alan. Okay. Sydney's totally disrupted my thoughts here. Okay. A break above $22 would be a good buy. A better buy would be a break above $23. We would know that it's complete. Most people want to pick a bottom. Okay, you can do that. Most people want to do that. Most people want to pick a bottom on this by standing in the way. So we can see that we're getting a bit of divergence. So there's a few reasons for us to get involved on that. So a break above $22 is a good thing. And we can see a little bit of confusion today. So possibly there's a little bit of a tick of goodness in there, and we need to. Alan says he bought BHP at $50 and sold at 39. Well, that's good, Alan, because you're not holding them now. I can't tell you. A friend of mine, like I've been telling him for years, it basically lives on Phillip Island. He's got a fair bit of money, but he basically was long. He was selling put options from over here, and I think I met him basically over this time, and I said, you better get out of those. And he's still holding them, still rolling them forward.
Heavens.
Still rolling them forward. So at the moment, we're in the zone. The best thing I can say to you is have a nibble here, and I have said to my investors who got out any time between $50 and say $30 to start to get back in on some into their portfolio. Do you understand what I'm saying? Is if you dumped your portfolio up in this region, then it's okay to get back in here as a long-term investor because you've improved the level. Now, if it busts through 18 bucks, then I'd worry about it. But what I'm seeing on the dailies today is interesting. And let's drill a little bit deeper onto this one. And we can see here the doji quite clearly. And we can see here it is still trending to the downside. So we want to see a small pivot point break above $21. You could buy with a stop loss below $20 and hope for 22. Above 22, that's good. Above 23, then that gets better. At the moment, it's down in Europe. And so if you're nibbling is the best idea. And I think there's BHP London. Let's have a look at that. It's always can be a little bit confusing because of the currency too. I can't remember the code. What's the code in London? You can change the screen. BLT, bacon, lettuce, and tomato. So you can change this. You can change the actual screen type to be bringing it down in size. London's off a little bit. Now, what's happened is the Aussie dollar has rallied, so it's possible that that's the reason for it coming down in London. Where's some good targets in London?
Just while you're looking, can I ask a question?
Yep.
For a long time, you were saying BHP down towards $20. Yep. You're saying it's going to go up. What target do you see long term?
No, I'm not saying it's going to go up, Terry. What I am saying is if it breaks through those levels, we certainly consider buying it more aggressively. At the moment, we're just taking a nibble with a reasonable stop loss. Okay, and saying if you're an investor, it's okay to get back in if you got out anywhere between $25 and $50 previously because you've improved your investments in BHP. What a trigger event is for Andrew Mackenzie to resign or be booted out the door. Now, he's responsible for what went on with this Vale operation. And at the moment, we can see on London, it's oversold. We can also see a weak rally. So we're in the culmination phase. We're in the end game in BHP. It's not easy to pick a bottom like this, and one day it will. Somebody with a lot more money than us will walk in with a big checkbook and go, "That's it. I'm just hoovering the market in BHP." But we need a couple more trigger events. I thought this disaster in South America was going to be a trigger, but when you see how much destruction there is, BHP is going to probably get kicked pretty hard on this one, and I don't think they can treat Brazil like it would a Venezuela or smaller South American countries where you just give a couple of $1 million to some politician and it's all fixed up and forgotten.
Right. Well, if we finish with BHP now?
Yep.
Okay. Well, I'm afraid that's it for time. Now, next week you'll be having a Elliott Wave webinar. Is that correct?
That's correct. Well, we may have that at 8 o'clock rather than 9 o'clock. I'll take that on notice. We'll answer a couple more questions, Terry. I do think we should go for another 15 minutes. I know your argument is that we shouldn't, but I think we should. Okay.
All right then. Yeah, we'll win. You always win. The banks. What's the story there?
Okay, the banks. I've been unkind to the banks, particularly ANZ. And ANZ has not been kind to most investors, but we're seeing a reasonable pullback at the moment. And if it clears through $27.40, I warned PHG members that we were nearing the end game in ANZ the other day, and it's bounced basically since we did that webinar. It was basically first thing in the morning here. It's gone from 25.23 up to 26.70. Let's have a look at the volume on it. And I'm going to actually explain why I liked ANZ the other day. Just just after this low had been, basically the morning of this day, first thing in the morning. And I'll do that in the Elliott Wave webinar. Would that be all right with people? Because there's some textbook stuff in there. So now basically up around 27.58 is where it should finish. And at the moment, if you're wanting to be long, stop should be below 25.85. Okay, so now the other ones were CBA, which has still been holding up well, and it's attracting interest because of the fact that it's going to pay dividends next, which I think is in February, and it can probably lob back up to $80. So that's
really?
Yeah, it's got some okay things about it. That $80 is still corrective in nature and may cause some trouble. The Westpac, yes, that's right, Tony. It was ANZ short term. Now this is Westpac short term. So Westpac, we're seeing a bit of a pullback up in the volume after it got kicked down because it went ex-dividend yesterday. Okay, so it's still mulling around with $32.58. Now, I won't be surprised if, like ANZ, it gets down to $25.50 where its issue was. I wouldn't be surprised by that eventually, but I think the $32.50 should be about it for the rally. But I'm not negatively disposed to the banks just now, largely because everybody's talking about them going down. Now, National Australia Bank, it's underperforming and may only get to 29.52. It's got the higher levels, and we've got I think it was 26.50 it issued at. So we'll probably see down here 29.50 is where it should get repulsed from and get down to 26.50 at some stage. Okay, any more quickly, Terry? We should just take three.
There's one last question.
Yep.
One less to go. What do you see the valuation for A2M, which is A2 milk? Where's it going in the next couple of months?
Okay, in terms of A2 milk, my kids used to buy that ages ago, and it's got some great ideas. I've read the book, it's come out of New Zealand, the A2 protein and the A1 protein and all that sort of stuff. I think there's a book called The Devils in the Milk. You can read all about that if you're really, really fascinated by it. Now, what we see here is an ABC pattern. It's in trouble if it's below 70 cents. So if you're long this one, the volume says it's okay, but we've seen a bit of a pullback off that 90 cent area so far. Not a lot of data to go for because it's been floated in the last basically 7 months. And my issues would increase on this on the shorter term below 76 cents. At the moment, you might consider buying around about the 81 cents with a stop below 79 cents if you're just trying to do a little bit of grabbing. Now, we see today, like things like BAL, Bellamy's, we see it get a little bit of ahead of itself, a pull back down to 78 cents to 81 cents, stop below 70 cents would be okay. So I don't think it's worthwhile buying just yet. Buy it on a dip, see how it goes. And if it breaks the 77 cents, then you might think about 70 cents on the downside. Okay.
Now I've got one final question. You must be doing your forecast for next year soon.
Yep.
When are you due to do that?
I'm doing that in not next Monday, not the following Monday, but the following after next. I'll be doing, and next Monday I'll be doing a preview for Profit Owner Group members, but the big one will be, I guess that must mean, I've just got to put that down. That must,
about 3 weeks.
Yeah, let's do it properly. That would be the 1st of December, and
Right.
That would be actually the 30th of November. Sorry, 30th of November. I'll be doing the big forecast then. Yeah, it will be a preview for Profit Hunter Group members only. So if you're not a Profit Hunter member, I'm sorry you can't join us. I will have a little bit of a preview next week. On Monday next week. But the big one will be the 30th. Well, I'll be revealing that, and we'll get an idea of what we can expect for next year and how to play the game. This year, you probably have noticed my forecast was for the Dow to go up. And what has the Dow done? The Dow's had a good year, and it was this is for those people who weren't here and hadn't been paying attention to my forecasts. Is anyone here hasn't done one of my forecasts? Yes, silver members can attend live on that one, and bronze members. Where are we? Okay, this is the forecast that I did at the start of the year for the Dow. Where are we? This is a normal year forecast, and it basically said, there we go, for a good year, basically not being too bearish. Now let's look at where and this I did it in November last year for Profit Hunter Group members on the Dow. Let's have a look and see how it's gone, because Dow. And this is the monthly chart. I'll bring it in so you got a bit of perspective. Okay, so it didn't give us the greatest run, but at least we were able to run for this, and it's actually not bad from where it started off. It's been a somewhat neutral year from open of the year to the current time, but at least what we've been doing is, this one was a time where we started to buy. This is a time where we started to buy. We were shorting the market over here for other reasons. So I'll be showing you why I do strategy updates. You might ask, why do I do strategy update? Because the market isn't perfect and things move over time. And when I see patterns that show me that the market is not ready to go and rock and roll, or when it's ready to roll over, or when it's ready to rock and roll, then we can get in and get out and have some bit of excitement. The recordings are available for PHG members or people who come in and re-register for the webinar as they go now. So they will be available a little bit later in today. Okay, so it's been a good rally up here. We've got some targets up here which have not been met. It'll be fun to see what's going to happen in the next couple of weeks. Okay, so a couple of people asked me, there was one more question, Terry, which you didn't ask, and that I think was from, I can't remember the person's name, about PHG membership. If you're an investor, he said, what would suit me? And it really comes down to what you are about. If you're an investor from a distance who says, I want to be exposed to shares and tell my tell my superannuation fund I want to be exposed to shares, or I don't want to be exposed to shares, and actually time the market, because a lot of returns can be made by doing just that, then you want to work off cycles, and when the market's ready to turn, then you go to cash, and when it's ready to turn up again, then you get into shares. That's a bronze membership. You also get instructions and times and targets for shares on a longer term basis, and questions to ask me during those webinars that bronze membership attends. So that is the minimum area so that you could attend the forecast in 2 weeks' time on the 30th of November. Now, if you're an investor wanting shares guidance, then the Australian Shares Report, which is $97 a month, or $997 for the year. that would be the best one. You get long-term and medium-term trades and targets and guidance on the big Australian indexes, the big Australian stocks, and we pick healthcare stocks, property stocks. We cover one of those in each section at least. We look at the telecom stocks in that 3 times a week. And then what we are doing is we also look at the top 100 stocks, and we look at the small and mid cap stocks to see where they are. Now that comes to about, I cover about 40 stocks in a day and indexes 3 times a week. So it's about 120 items you look at. Some of them may be similar and consistent. There is a core. If you're in a self-managed, so that would be the Australian Shares Report, which is available for $97 per month or $997 per annum. If you're a self-managed super fund owner, a broker or a planner, a trader with a job, this package is very popular with brokers and financial planners. It's the silver package, and what it does is it gets all of the material that the gold members get, and it's $347 per month for full membership, which covers commodities like gold, iron ore, Baltic Dry Index. It covers US stock markets, international stock markets like the Nikkei, European stock markets, German DAX, etc. Bonds, commodities. It also covers foreign exchange and ASX shares. So if you're running ASX shares, that's good. And you can specialize on those with the ASX Silver package at $297 per month. Now we do have annual services, which makes these cheaper if you pay up front. And gold is for active self-managed super funds, brokers, advisors, traders who want to ask me questions. They want to be able to go, David, I want to know right now what you think, and I'll answer within 5 minutes to 2 hours, depending on how busy it is during the day. And so they'll generally get that within 5 minutes to 2 hours. So if you've got a position on, what do you want to do? We also come in and we set up trades for the day the Profit Hunter Group trades, where I give recommendations as to what to buy and sell. Gold is $547 per month, and ASX Gold is $497 per month, and cheaper for monthlies. And what I would suggest for people who are, what I'll do is for people like a little bit of a price off there. For the people who come to me tomorrow, I'll give a 10% discount across the board for tomorrow only. And you need to come to me and send me an email to david@adesk.com.au. I'll put it up there, just send it up there. david@adesk.com.au. Choose your package, have a look at it on the website. You can also and put it up there. If you want that, 10% off tomorrow only, a Christmas present, and that will get you in for the forecast webinars as a PHG member. Okay, and thank you, Terry, and sorry we went a little bit longer, but I wanted to do Santos in a bit of thorough ones. Okay.
I'm glad you did. It was very good.
Thank you.
Well, good night, David, and good night, everyone. Thanks for joining us tonight.
Okay, thank you. Good night, everyone. Have a good one. Bye-bye. The recording will be up shortly as well. Get in the front page. Good night, everyone.